Welcome to the Daily Update Podcast, where I'll go over the action in the market for Monday, August 18th, and we'll see how things look for Tuesday, August 19th. The S&P 500 had a quiet session on Monday, closing marginally lower by 0.01%. Trading volume was below average, reflecting a lack of strong conviction in the market. Before the open, the futures were down slightly, and the day saw mild fluctuations with no clear directional momentum. Looking at the different sectors, healthcare on a relative basis showed some strength, hinting at a potential shift towards defensive sectors. Meanwhile, small and mid-cap stocks outperformed their mega-cap counterparts, with discretionary stocks outpacing staples. This divergence suggests investors may selectively be rotating into riskier assets while maintaining caution at the same time. From a technical perspective, the S&P 500 remains positive across all time frames, but short-term momentum is showing signs of softening. Indicators including the Williams percent-R and CCI 20 are declining, though the negative divergences are improving. The index is currently facing resistance at the 64.68 level on the weekly chart, a key hurdle to watch in the coming days. Market sentiment ticked up slightly, moving to 65 from 64, but as we've seen for many years now, valuations remain stretched. Concerns continue to linger around revised employment data and potential tariff costs impacting corporate margins. On the earnings front, optimism persists for the so-called Magnificent Seven stocks through 2026, but when looking at the broader S&P 500, they are down by about 4%. Moving over to the economic and geopolitical context, this week all eyes are on the Jackson Hole Symposium, which kicks off on Thursday with Federal Reserve Chair Jerome Powell giving a speech on Friday. Powell's 2022 remarks at Jackson Hole significantly shaped market expectations, and investors are approaching this year's event with caution. Geopolitically, the recent summit in Alaska yielded no major agreements, but ongoing discussions among U.S., Ukrainian, and European leaders could influence market sentiment. On the economic front, the 10-year Treasury yield edged up to 4.34%, still below the critical 4.5% threshold, while the U.S. dollar saw a modest increase. Looking ahead, key data releases include the FOMC meeting minutes on Wednesday, followed by housing starts, building permits, and jobless claims on Thursday. These reports could provide further clues about the Fed's next moves. Looking ahead to Tuesday, August 19th, the S&P 500 may remain range-bound, given Monday's narrow trading range and tightly clustered pivot points. Overhead resistance continues to pose a challenge, and a significant catalyst will be needed to push the market higher. Seasonality data continues to raise a note of caution, yet still has yet to materialize, as post-election years typically see negative returns in August, with potential weakness extending into September and October. However, positive factors include strong earnings guidance, with 58% of companies having raised their 2025 forecasts, and robust foreign inflows into U.S. equities. In summary, the S&P 500 is currently treading water with low conviction, maintaining a positive trend across all time frames, but grappling with resistance and mixed technical signals. The upcoming Jackson Hole Symposium and ongoing geopolitical developments could introduce volatility at any time, so investors should stay vigilant. I hope you found this podcast helpful. For more in-depth analysis and commentary, the full-length daily video update is available on YouTube and Rumble right when the market closes each day. To access the videos immediately after they are available, or to access the daily newsletter, please click on the links below.